So in my last videos, I showed you the bad trades in my track record, right? And one of the most important things in trading that you need to understand is that you have to learn to deal with reality, okay? There's absolutely nothing good about ignoring the reality of anything. You have to be able to deal with it. What it means is that the good, the bad, the ugly, all of it. And since we had the bad and the ugly, and I showed you that in the last couple of videos where I showed you bad trades, now it's time for the good. Show you some very nice trades. Same strategy, same approach, all real taken trades of the track record account, okay? Because that's what makes it actually so valuable. If it was just like some fantasy nonsense, who cares? Those are real trades on a real market taken in real situations. And they created this consistent track record with over 100% return, 1.7 years of consistent profitability, okay? Numbers don't lie. And that's why I love a statistical edge. That's just the thing. It sounds complicated, statistical edge, like what the heck? Oh, do I need to be a math professor now? No, absolutely not. You just gotta match probabilities with simple market structure, and that's how basically 90% of this type of strategy and the ability to put it into action. So like basically like my dog could do it in theory. All right, let's move on. So again, yeah, that's the strategy, same strategy. 112% on this account, and most importantly, 2,789 trades. Yeah, 20,200 pips. Here you see all the profitability of each and every single month. Obviously verified as well. So let's move on to the good trades. Beautiful. So here we have pound CAD, and again, it's exactly the same approach. We're looking for trend continuation trades. And we do that by lining up market structure from the larger to the smaller time frame first. So here, clearly, we see this is the weekly again, right? You see here a correction. This is where we found the bottom. As I said so many times before, we don't look at wicks. We looked at closed bodies of candles only. The price went back up, formed a high here, came back down, had a higher low, went back up, formed a new higher high, higher than this one, now correcting again. And then actually, as it corrected, did not break a lower low than this one. It was a higher low again here, around the 170.80 level. And now we're looking for a continuation, right? That's the whole strategy. That's basically the whole strategy. Now we look at the next one, the daily bullish structure. The weekly was textbook, and even the daily, we had like, again, here, the correction, we went up, down, up, down, up, down, up, down, and now we see a little bit more of a correction, but that correction held very nicely at these zones. And I'll explain these zones again in a second of how I actually determine them. And again, it's very, very, very simple. So over here then, the trade was actually taken as we saw this retracement back up after it did not break it to a new low here, not to this invalidation point, that would basically look for a retracement here to that round level of 170.80 and then a continuation back up. So that's on the daily. Closed above structure and trades above the EMA and SMA. So here you have the EMA and SMAs. You see that. Price trades lovely above it. So everything is perfectly aligned and as it's supposed to be for the strategy to work. Here we have now the 4-hour candle, and this is the corrective move. You can see that again here, it went back down, right? Formed a low here, corrected up, came back down here, and then went back up, did not go lower than this one, very important. And now on this correction again, we took it basically here. We were waiting for this one. Important, this candle, again, we're on the 4-hour, closed above that structure. So this is basically the trigger telling us, okay, we're back in continuation mode of the bigger underlying move, okay? This is a corrective phase within a bigger underlying move into the other direction. That's how it works. So that candle here, that closed candle again, is higher than this level. So we look for the next correction. If that next correction is higher than we had here, which is here, you see that? We take the trade. Boom. Very simple. And that's exactly what we did. And now, just to show you again how these zones, because these zones are important, because you see here, the trigger for the entry was also on that kind of zone. And that zone, I explained it also in the video where I explained the full strategy in total. I count, and you can see here, like it held here, it held here, it held here, it held here, 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 here. So this zone has a significance on the daily. You see that? So on the daily, clearly we see that that price or these price levels or price zones had been tested and retested repeatedly, so they are relevant. They have significance, statistical significance, because they happen so often, more often times than others. You understand? And that's why we also saw when it came back down here, was supported again at the same level that had significance here, significance here, significance here, significance here, okay? And then even our target is now this level because it had support here, was support here. And now we're looking, if we trade from here, this is our target. Very, very simple. Literally, there's nothing here that is in any shape or form voodoo or magic. Anyone can do this. And also, this is now on the 1 hour chart again. So to also tell you about my targeting, because I know a lot of people like to flex with their 10-to-1 or whatever type of risk reward. I'm taking 1 part of risk for 2 parts of profit. That's very simple. A 1 to 2 risk reward I'm taking here. That's all I'm looking for, and it works like a charm for a consistent long-term track record result. And that's exactly what happened here. So you see on the 1 hour structure, beautiful, price came down, held on the support of that zone. We entered the trade, stop loss, it didn't even go into any negative territory. It turned immediately around and boom, hit our target. Very beautiful. The only thing we could have done a little bit better if we wanted to squeeze a bit more juice out of that trade was, that was too much. To look at essentially, there was a daily structure that I wanted to show you because the price actually went back up a lot more. Actually, I can show it to you also on a 1 hour chart. Let me show you here the trade potential, because the price didn't just go into our take profit so quickly. It actually didn't take too long for it to hit the next level here. So the next zone. So you could have argued, because we had such a good textbook structure before, that we would take half the profit here and then let the other rest run. In this case, I took all the profit here at the first run. So, you have to then start to look into your data, like how many times when I have a textbook perfect structure can I actually increase my target? And you need to make it obviously also pair specific. So you can optimize onto these things, but this is not going to make or break your total trading result. More importantly is to have the clean structure with the statistical edge and the probability on your side, and that's how it works. So the learning of that trade is very simple. Textbook trade. Trust your strategy rules. They are there for a reason. You work them out. So, it was such a lot of work and effort to create all of this. And that's why it works. That's why you're confident doing it. And that's why you get a positive result. Just keep doing what you're doing.